Hello everyone, today's video is all about investors relief. Now investors relief is a tax break. It's all about reducing capital gains tax. I would say it's quite a little well-known relief. Not many people have heard about it, but it could be very interesting to some of you, particularly if you are thinking about investing in certain businesses, hence the title, Investors Relief. So what is it all about? So let's take a dive straight in. So, like I said at the top of the video, it's a capital gains tax play. So it's all about CGT relief. Normally, when you sell assets, you pay capital gains tax. Now, this is all about shares. We're talking about shares in limited companies, not other types of assets. It's all about shares in companies. And the bottom line is that you pay only 10% tax on the gain when you sell shares in these companies that qualify for what we call investors relief. So that's the first thing, reduce capital gains tax. Because normally if the investors relief didn't apply, you'd pay double that, it'd be 20% capital gains tax, right? This applies to individuals. This is not a corporate play. We're not talking about companies selling other companies. This is individuals who are selling shares in companies. Disposal of shares. You have to have subscribed for the shares in the first place. So that's important. So these shares that you were selling, when you bought them, you haven't bought them second hand on a listed market on the stock exchange. They were issued to you. So that you what we call subscriber shares. So new shares issued to you. That's one of the conditions. And then down the line when you sell them, you claim this investors relief. So this only came in about 5 years ago. So it's only for shares that were acquired since the 17th of March 2016, and they had to have been held for 3 years, and that's still the rule. You have to hang on to them for 3 years. So we're only talking about disposals of shares that would qualify since 6th of April 2019. So you hang on to these shares for 3 years. The shares themselves have to be in a trading company. So the company has to have a trade, or you invest in the holding company of a trading group. So you invest in what we call Topco. Topco does very little other than invest in subsidiaries which do trade. That qualifies because the whole thing is a trading group, even though technically you were investing in a Topco that does very little other than hold the investments. Investments in unlisted shares. So that's the thing. This isn't tax relief that you're going to get for investing a lot of money on the FTSE 100 and thinking you're going to get 10% capital gains instead of 20%. No, these are all unlisted shares. So next, it's important to say, okay, well, there are other tax reliefs out there that give you capital gains tax breaks as well. So what's the interplay between investors relief and some of these others? For example, entrepreneurs relief, or what's now referred to as business asset disposal relief, but still lovingly known as entrepreneurs relief. That as well is 10% capital gains tax. So what's the difference? Well, with entrepreneurs relief is really, for want of a better phrase, it's for when you're selling your company. When you built a company up from scratch and you've been working in the company and you want to get out, you sell the shares of your company and you get entrepreneurs relief, tax at 10%. This is a different kind of thing for different circumstances. This really is aimed at business angels. So business angels who've been asked to invest in a company and they put their money in. After a few years, when they sell their shares, that's when they get this investors relief at 10%. Similar to what entrepreneurs relief does, for the main shareholder, in the terms of its 10% tax. So that's the interaction. But the whole point of investors relief, it's for those who are not going to be involved in the business. So angel investors who don't have any active involvement. Because one of the conditions, of course, for entrepreneurs relief is that you've got to be an employee, a director. So two completely different sets of rules. Investors relief more designed for hands-off business angel investors. What about some of the other tax efficient ideas out there, like venture capital trust, EIS? If, let's say, you've got a company and you're looking to attract some investment, and you apply to HMRC and say, can I have my company granted EIS status? Straight away, when that comes back as a yes from HMRC, the investor's money only cost them 70% of what it otherwise would have done. So I've done separate videos on EIS, but basically the upfront tax relief is 30%. So you've got an investor and they're going to put 100 grand into your company. But if you can dress it up as an EIS qualifying company, that investor will get 30 grand back against their tax bill. So that 100 grand investment only costs them 70. So if you have the choice, if you can, as the investor, nothing trumps EIS for capital gains tax because the capital gains tax at the back end is 0. Whereas with investors relief, it's 10%. So from an investor's point of view, if you're seeking out where to put money in small startup companies, then yes, if you can get EIS, that's going to trump investors relief. But the thing with EIS is you've got to jump through quite a lot of hoops, particularly with regards to the type of trade. So with investors relief, it can be any trade at all. The company that you invest in, as long as it's trading in something. But for EIS, because the tax breaks are so generous, i.e. 0 tax at the back end as opposed to 10%, there are more hoops to jump through. And one of them is the type of trade. There's a whole list of prohibited trades that you cannot have if you are trying to get EIS status. So a lot of businesses will want to get investment, but they are precluded from having EIS status because of the nature of what they're doing, even though they are trading. In that case, the investor, whilst they might not be able to get EIS relief, they could still get this investors relief at 10%. So that's just a bit of interaction there between what's the difference between investors relief, entrepreneurs relief, and the tax breaks on EIS and VCT. Yes, if you can get an EIS investment, that's the one to go for. Purely from a tax perspective, because it's 0 capital gains tax. But if the company doesn't qualify, invest, you can get investors relief. Like I said, aimed at business angels. But the rules say a business angel can become a director later on down the line. And a lot of business angels become what we call NEDs, non-executive directors, and they do have a bit of participation in the business at some point. So it's not for directors and employees at the start when the investment comes in. Like I said, later down the line, there is rules that say business angels can take a non-exec position. Also, this does apply to, like I said, it's unlisted securities, so not things on the stock market, not shares on the stock market. However, AIM shares are deemed to be unlisted. But before you get all excited and say, I'm going to pile in 100 grand into ASOS stocks and get 10% capital gains tax at the back end, remember, you have to subscribe for these shares. So these are subscriber shares, even though they can be on AIM. But technically, the investment could be on AIM shares if we're talking about a subscription. Now, I've done separate videos on how shares are issued to shareholders. We've got rights issues, bonus issues, placements, open offers, all sorts of things. So even though it may be on the AIM, if the shares are subscribed for, then it could qualify for this relief. So the beauty about investors relief, which I think is great compared to entrepreneurs relief, is that the 10 million lifetime allowance has not been reduced like it has for entrepreneurs relief. So remember, if you have your own business and you sell, that 10% capital gains tax used to be on the first 10 million of gains. It was 10 million for many years. And then only recently, the last couple of years, they've dropped that to 1 million. So that makes a big difference. So let's say you sell your business for 5 million quid. You used to be able to just pay 500 grand and trouser 4.5 million. Now you got to pay 10% on the first million and then 20% on the balance. So you're a lot worse off. However, for investors relief, that 10 million, when it was written in law to match entrepreneurs relief threshold of 10 million, that subsequently wasn't reduced a couple of years ago when they reduced the generosity of the entrepreneurs relief. So if you're claiming investors relief, you can have 10 million of gains at 10%. So that's pretty good. So you're a business angel, you put a few quid into this company and it's going places, you're going to get the first 10 million at 10% tax, not the first 1 million at 10% tax. So that is really good. No minimal share percentage. There's no minimum amount you have to subscribe for in these companies. So again, compare and contrast with Entrepreneurs Relief, where you have to have 5%. So yes, for most business owners, they're easily going to meet that. But for investors, 5% might be a big amount. But it doesn't matter. For investors' relief purposes, you can invest 1%, 2%. It doesn't matter. You still get the generous tax break. So, for example, you could get a business angel who has invested for 2% shares in your company, and the company takes off and does really well. Even on that low percentage of shares, they've still got this 10 million potential gain that they can get the investors relief at 10% on. So, what about really having your cake and eating it and saying, can I claim entrepreneurs relief and investors relief at the same time? Well, the answer is yes. So even though I've said it's basically aimed at two different groups of people, entrepreneurs relief is for if you're selling your business, you've got most of the shares, you get out, first million at 10%. Investors relief, business angel comes in, they get out when you get out, but they can get up to 10 million at 10%. You only get 1 million. But what if you're the investor? What if you're the investor? Potentially, you could get 11 million at 10%. How? Because like I said here, when you invest in these companies as the business angel, there has to be no connection with the business. You are a silent investor, if you will. But then only later on are you allowed to become a non-exec director. So, one of the conditions for entrepreneurs relief is if you are an employee or director and you have 5%. So let's take an example of an investor who say has 5%. So they put 5% in. You've got Mr. X who started the business, he's got 95, you've got a business angel with 5%, and he's a NED, he's a non-executive director, and he's not a remunerated director. So he's taken no remuneration from his role as a non-executive director. In that case, he can qualify for both entrepreneurs relief and investors relief when he sells his shares, his 5% stake in that company. So he can get £11 million out at 10%, even though the founder can only get £1 million out at 10%. But of course, the founder's going to get 95% of the cash. Yes, he's just got an extra 10% to pay on anything over $1 million. But it's certainly is a very good tax break, particularly aimed at those who are business angels. If you've got a few quid, you're looking to invest in an interesting business. It doesn't have to be a startup; it can already be going for a while. As long as there are new shares issued to you, you subscribe for shares, then investors relief can apply. And again, principally, if the business that you're looking to invest cannot qualify as an EIS company because of the type of business that it does, then you can qualify, hopefully, for investors relief. And like I said, the best thing about it is this 10 million lifetime allowance, which hasn't been reduced to mirror the reduction in the 10 million to 1 million for entrepreneurs relief. So just an overview there on investors relief for those with a few quid in the back pocket looking to invest in businesses, in shares in limited companies. If you like this video, please do subscribe, and as always, I will see you soon.